Hello, Maverick traders. Welcome out to your market roundup. It's June 16th. Corey here with you. We're going to go through major news today. We're going to talk about the unwind of the Israel-Iran, at least temporarily, what sectors are heating up, what's cooling off, and as always, highlight our very best trade ideas.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So the markets had more of what has been going on, which is they continue to rally. They continue to perform well. You can see it in the performance. Dow, S&P both up around 1%. NASDAQ, the outperformer, up 1.5%. Russell up about 1%. And oil gave back a big part of the Iran-Israel conflict, the fears, the knee-jerk reaction fears. I think oil was up 8%. Now it's given back 4%, so a good portion of that jump. Gold also, you can see kind of the calm coming back in and the safe haven status. Not really a place where people think that things are going to escalate much further. If they did, if they thought this was going to be a full-blown world war, well, you wouldn't see the NASDAQ up 1.5% and oil down 4%. So we'll see if that plays out. On the daily news, Trump Organization announced that they're launching a new phone and a new phone plan. I personally will not be in line to get that first iteration. I'm not so sure that they can compete with Apple in quality and so many other things, but I'm sure there's some market out there for it, so that was kind of interesting. Advanced decline line, 67% of stocks advancing, and the 50-period moving average shows that we're in a bull market with 3/4 of all stocks above their 50 MA. If you look at the S&P 500, the red line up above shows where the all-time high was previously, and we're just not too far off of that. It certainly seems to be what the markets are trying to approach. Again, the Israel-Iran conflict, a little bit of a pullback, but nothing major. As much as that pullback, we've pretty much recovered even above Friday's highs, as you can see there. So certainly not anything to panic over. Market seems to be back trying to go up and challenge that prior high. The NASDAQ not too far off either. In essence, it's the same chart, just a little bit different look and feel. Again, we recovered off of Friday's drop, and we look poised to try to go up to new highs in the short term and possibly challenge those all-time highs in the not too distant future. Now, if we look at the heat map, Meta, formerly known as Facebook, bright in the green. You can see the semiconductor software space, very, very green. You can see a lot of red in the healthcare space, a lot of red in the utility space. Financials, very green. So this is a classic, what I would call risk-on environment, where the economically sensitive sectors were strongly higher. The defensive sectors like healthcare, real estate, utilities, consumer staples, those were all in the red. So definitely a risk-on day where people were suggesting that they think the economy is going to grow, that things are going to boom, and they want to be positioned for that. Above the 20, above the 50, we don't have a nice big upward slope, but it's certainly more upward sloping than down by all means. A little bit of a sideways tint to it perhaps, but I think we could start to even call this transitioning into the +3 category. Now, bulls, neutral, and bears, we've got a little bit of something for everyone. On the bullish side, here's eBay, and you can see from the chart, just a classic bull pullback. You accelerate on higher volumes, you pull back on declining volumes, and the expectation is that just as some of these other dips were bought, that this dip will get bought and carry us to new highs. So eBay, nice price action, just a standard bull pullback buying opportunity perhaps. If we look at EQT, a little bit different look. This one has consolidated for weeks, and we have just now broken out to new highs on increased volume. Technically, very strong. Fundamentally, if we look at this business, it's tied, its future growth would be tied to the commodities of oil, nat gas, those sorts of things. But just from a trading perspective, you can see the nice breakout to the upside, and certainly a more bullish chart than anything else. IBM, another bullish candidate. This one has already broken out previously and now just continues that upward phase. You like to see when it dips, it's just lighter volumes, and as it starts to rally, more volume comes in. It's just classic bull market behavior. So next, we've got Uber, which is more on the neutral side of things. And the reason I say that, you've got a series of lower highs in the price action. Look at the 20 sloping downward, the 50 sloping upward, and certainly on the longer term, your trend line would be up. But this is kind of a classic, hey, we're going into a phase where we're probably going to stay relatively range bound for a little while, for a couple more weeks, that sort of idea. So Uber could be a sideways candidate. On the bearish side, you've got T-Mobile, recently broke levels of support on increased volume. A little bit of a bounce back today, but one would anticipate just a kiss goodbye, a little retest of the prior breakdown zone and further deterioration. UNH, this one, I'm not so sure that it's not a sideways candidate as well, but I would call it sideways to bearish. If anything, the stock is going to challenge these 280s or possibly just kind of stay more range bound in the 300-ish range. But I would call it neutral to mildly bearish. And then last but not least, Verizon, which has been in a big consolidation. This is a classic range bound trade, not unlike where Uber was back here, but notice this symmetrical triangle. See how it just got wound tighter and tighter? A series of lower highs and higher lows for the past few months, and just now seems to be breaking out of that. And usually when you start to break out of a multi-week, even multi-month consolidation, there's some momentum that continues and continues from that. So Verizon, symbol VZ, this is what we would call a volatility compression idea, where the volatility, the peaks and valleys just get compressed tighter and tighter and tighter, and then once it bursts, you generally get a pretty solid follow through. So I would think that if Verizon bounces for a day or two, we'd continue to look to initiate bearish positions for the foreseeable future. Uptrend persists in the markets. There's just really not any reason to bet heavily on the bearish side. The trend is up. That can change. We've got monthly options expiration this Friday. We've got the Fed meeting on Wednesday. But until it does, I just think it's kind of status quo. You've got Darden, Kroger. I think both of those report earnings on Friday. It's a very, very light week for earnings. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.